right. Happy Good Friday, all you magnificent melon heads out there. I hope you are well. Markets are closed today. What a boring day. Does anybody else get that? I know it's kind of bad. It's probably not saying very much about me. But I get a little someone mentioned it in the comments earlier while I was freaking out in my traditional pre-live stream freak out. Somebody mentioned in the comments that it's almost like lonely. Like, oh, I don't have any charts to keep me company today. It's a lonely Good Friday. That's fine. I mean, I have so much to do. I have more to do than hours in the day. My God. Still working on the chicken coop. That is an ongoing project. Got a ton of work going on out there. Got a lot going on at home. Got a lot going on with the day job. Trying to keep the channel updated while all this is going on. Getting a little bit done, but not exactly succeeding at all of those. But here we are. I'm not going to miss my Friday live stream. Come hell or high water. Absolutely not. This is the best part of the week. And I see a lot of familiar faces in the chat. Hello, everybody. I hope you guys are doing well. And no, Drew, I was not having my makeup done, and I was not doing my vocal exercises. Thank you very much. That was hilarious, by the way. I got a lot going on today. I got a lot of charts to show you guys. Having the day off, market's not moving today, gave me a little bit of time to look at some of the charts a little closer. And the more I look at it, folks, I think it's already started. I think the crash, maybe not the plummet from the cliff, but if you look at some of these charts, you can see that it's pretty clear as day that these charts in the market rolled over a few months ago. And I don't think we're going back up. I don't think we're going to see another all-time high in the S&P 500. Maybe not in our lifetimes. I don't know. I think it started. And, with that, I think we're just going to go right ahead and we're going to shrink my big, fat melon of a head. Because I want to start with this one right here. This is the S&P 500. All right. And, take a look at that chart. This is going back a year. But that sure looks like that chart has rolled over, hasn't it, folks? And if you don't see it, give me a second here. I'm just going to do a little doodle here in Yahoo Finance. Make sure you guys can see, and you can. But to me, what I see here is I see a little shoulder there. I see a head there. Let me draw it a little better. And then I see another shoulder here. You know what that is? That's your basic head and shoulder, folks. And, for you guys who aren't technical types, you know what a head and shoulder means? Here, let me do it right. Head and shoulder means that. Means big, fat arrow down. That is the worst, just about the worst pattern you could possibly have. And if you want to zoom in a little bit more on that S&P 500 chart, I'm also going to draw your attention to this little guy here. That is a death cross, where the 50-day moving average crosses below the 200-day moving average. Again, one of the worst technical indicators you could possibly have. So we've got a head and shoulders pattern forming. We've got a death cross. We got a week of just absolutely horrendous bank earnings. We'll talk about that in a minute. I mean, the bank earnings were just awful. The press didn't really think so. I mean, if you would have woke up, what was it, Thursday morning, and looked at just the headlines, looked no closer, just the headlines, you would have think, oh, wow, bank earnings were great. Because that's what the press wants you to think. Because that's what they want to trick the algorithms into thinking. The bank earnings, I'm just going to say it, they flat out sucked. By the way, I forgot to say, hi, Mom, hi, Dad, love you guys. Happy Easter, happy Good Friday. I will see you shortly. I know Mom and Dad are watching, even though Mom is probably in the kitchen frantically preparing Good Friday dinner for the arrival of all the grandchildren. Moms are great like that. But back to my charts. Again, love you guys. This is a bad-looking chart, folks. This S&P chart is UGLY ugly. This is so ugly. Market's going lower from here, all right? Now, that does not necessarily mean the market is going to fall off a cliff. And I guess I got to eat some crow once again because I thought bank earnings were going to be the needle that popped it this week. All right, I was talking a lot about it last week. The bank earnings, they were every bit as bad as I thought they were going to be. The markets just ignored it. The markets didn't care. The bond market didn't ignore it. All right. The bond market moved. Precious metals moved. But the stocks just, terrible bank earnings. Bank income down 40% year over year. No big deal. No big deal. That's not going to last longer. And as we get deeper and deeper into earnings season, and especially these big tech names as they start reporting, all right? Now think about it. I saw an article not too long ago about things in light of inflation, all right? Picture your own personal situation. Say you don't have a lot of discretionary spending in your income. Say you're living check to check and your food bill goes up 20%. Where are you going to find that 20%? I know where I would find it. I would start canceling subscriptions. I would eat out less, and I would go on fewer vacations. So that's Netflix. Oh boy, got a lousy quarter coming from Netflix. Disney, lousy quarter coming from Disney. Any of the travel stocks, not that they've already been just absolutely brutalized by the pandemic. The restaurant stocks, leisure, hospitality, all these, their earnings are just going to be horrendous. Now the consumer staples, their earnings will be pretty good, but that's not enough to sustain this S&P chart. All right, and keep in mind the S&P, like what is it, like 25 or 30% of the S&P is made up of like 5 stocks. You know, Apple and the big tech numbers, they're not going to post very good numbers. Certainly not iPhones, right? Who's out buying expensive new iPhones when they can barely afford to eat? Certainly nobody in China right now. Nobody in Shanghai is buying an iPhone. What is going on in that place? Oh my God. So this S&P 500 chart is already starting to roll over. And by the way, I just want to mention here is the old MMMRI or the M cubed at 221, well into the extreme risk category. And that is all about your 10-year yield going higher. But look, not just the 10-year yield. Look at that dollar getting stronger. Now 100. You know what that is, folks? When we see the Dixie going up, even though we have rampant inflation, that just goes to show you how bad things are globally, all right? Because if you look at the Dixie, which is the dollar compared to a basket of other currencies, namely the euro, but also the pound, the Canadian dollar, right? It looks like the dollar is getting stronger. Well, try going to the grocery store and explaining to the clerk that we have a strong dollar and that your grocery bill should be lower. So what the Dixie is telling us right now is that the other currencies are doing even worse than ours is. So what you have when you have bond yields going higher, at the same time, you have the dollar getting stronger. At the same time, you have gold and silver going higher. There's a flight to safety going on right now. Not so much in bonds. If you had a flight to safety in bonds, you'd see yields going lower. We did see that a little bit earlier in the week, not so much yesterday. But with precious metals going higher, with commodities going higher, but the Dixie getting stronger, that's people are dumping other currencies and they're flowing into the dollar. Even though the dollar is losing its status as the world reserve currency, or at least it's starting to. So keep an eye on that. These are all things that are driving the MMRI and the M cubed higher. And by the way, let's look at Manarino's original indicator while we're here. 177, almost in the high-risk territory. That is nothing to sneeze at. So this thing, I mean, look at this trend down here at the bottom, just going higher and higher and higher. All right, so risk is starting to pile up in markets. Now, I want to talk a little bit about what I saw in the banks this week. I talked about this a few days ago. This is a chart of XLF, which is your financial sector spider ETF. All right, now this holds all your big banks and all your big investment banks. So JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, Wells Fargo, right? All of them wrapped up into this one ETF. And I talked about in my video the other day that we had a death cross in this ETF. All right, again, very, very bad sign when you have a death cross in the ETF. And we've now made lower lows a couple of times in a row. I've drawn this little trend line here in purple. And after this death cross and after this lousy week in bank earnings, I think we're heading back down to this line before we get any kind of bump. So bank stocks are going lower from here. All right. I get the conventional wisdom, and I've heard a lot of people talk about it. I hear it on CNBC. I hear it on other channels that I respect, saying that banks should be going higher because interest rates are higher. But that's discounting the inverted yield curve. With the inverted yield curve, banks don't make more money, because banks borrow short-term and they lend long-term. And with the inverted yield curve, short-term is more expensive than long-term, which means banks' margins are getting compressed. They're getting squeezed. At the same time, people are not taking out mortgages like they used to, so they're making less loans. So banks have less income coming in. And I did that whole video 2 weeks ago about this mess in commodities. That's going to start hitting the banks. It already hit JP Morgan. JP Morgan took a $500 million loss in their commodities trading desk in this last quarter. 100 and some odd million of it was just that nickel fiasco alone. That's going to get worse as precious metals keep going higher, as commodities keep going higher, and commodities will go higher. So I am not going nowhere near bank stocks right now. Let me just say that. I'm staying away from the bank stocks. They're going lower. Now, here, let me just show you real quick. Here's JP Morgan's chart. There's a 1-year chart of JP Morgan on the screen there, all right? Ugly, ugly chart. JP Morgan's going lower. Now, I woke up Thursday. There was a whole lot of banks were going to report Thursday. And I started looking at the headlines. And I remember looking at the headlines saying, oh my God, I was wrong. The bank earnings were great because every headline I saw beats expectations, tops Wall Street estimates, beats on top and bottom line, all of these fantastic, wonderful headlines. You would almost think that the banks just reported these beautiful, beautiful quarters. But that didn't happen. All right, the banks reported awful, awful quarters. And for some reason, the press is out there saying that the banks exceeded our expectations. Whose expectations? Because your expectations suck. Let me show you some of these headlines. This is ridiculous, all right? Here's the first one. Citigroup Q1 earnings and revenue surpass estimates, right? You'd look at that headline and you'd think, wow, Citigroup just posted a great quarter. Well, here you go. Citigroup's profit, their earnings, down 46% year over year. Revenue down 27% year over year. And the headline says, earnings and revenue surpass estimates. 42% year over year decline in earnings, folks. And this is the headline we get. It's almost like the press wants you to think there were good quarters because they want their buddies in the big banks and their buddies in big finance to be able to get out while suckers buy in based on headlines alone. That's why you never, ever trade based on a headline alone. Always bring up the article first. Always seek other sources to confirm what you're reading. Always read the other side. Because if you traded just based on this headline, if you saw Citigroup earnings and revenue surpass estimates and then you real quick bought out and tried to buy Citigroup stock, you would have got cleaned out off of this headline. Not financial advisor, not financial advice. Do your own research, your own DD. Arrive at a decision right for you based on your unique situation. But me personally, never trade on a headline. All right, maybe that was a fluke, right? Citigroup was one thing. Let's look at Goldman Sachs. Look at Goldman's headline. Goldman traders trample estimates on boom and fixed income. Look at this bald-headed beauty with that big S-eaten grin on his face there. Goldman must have had a great quarter, right? Look at that headline. My God, all unicorns and rainbows at Goldman Sachs. Well, Goldman's earnings are down 42% year over year. And their revenue down 27%. Whoops. What happened to the trampling estimates and the boom in fixed income? Nope. Again, if you go trading just on the headline, it looks like it was a great quarter for Goldman. Not so much. All right. I don't know how in the world we can say they topped estimates when their earnings are down 42%. What would you think about a company whose earnings have been almost cut in half in a year? I'd say that company is hosed. I'd say that stock is doomed. I wouldn't say they trample estimates on boom and fixed income. What about Morgan Stanley? Morgan Stanley tops Q1 earnings and revenue estimates. Another shiny headline. Man, the banks are killing it. Nope. Morgan Stanley earnings down 11%, revenue down 6%. But they top Q1 earnings and revenue estimates. I don't know whose earnings estimates they were. I don't know whose revenue estimates they were. But we need better estimates because that's much better than Goldman and Citi, but still, earnings down 11% year over year. That's a company that's doomed. PNC, let's check them out. PNC beats the street with 1Q earnings per share. Oh, they beat the street. Great. Well, not so much. Earnings down 26% year over year. Revenue was actually up 11%. PNC was the one that managed to increase their top line at least. But still, earnings down 26% year over year. Oh boy. But again, if you trade just on the headlines, not so much. Wells Fargo, Q1 earnings beat on higher net interest income and lower costs. Oh, they beat. Wells Fargo must have had a great quarter. Earnings down 21%. Revenue down 5%. Mortgages issued down 33% year over year for Wells Fargo. 33% decline in mortgage. Oh, and by the way, for PNC, we need to back up one more for PNC. There was a little note in their earnings release that non-performing loans, i.e. loans that are either behind or defaulted, are up 7% year over year. The defaults is already starting. Folks, the banks are getting crushed. The banks are getting crushed. But look at the headlines, and it's all unicorns and rainbows because the press is selling a bill of goods. Never, ever trade on just the headlines. You always got to open up those conference calls. You got to look at what's actually in the financials. So absolutely just god-awful, horrendous bank earnings all around, even though the press doesn't want to admit it. All right. Now, something else I want to show you guys, and that is the chart. Here we are. We've got the chart, right? You guys like the chart? We've talked all about that for a while. Well, not so much. I missed my chart, obviously, did not do what I said it was going to do. I said something bad was going to happen at 2.2% on the 10-year. Let's zoom in a little bit. No. Look in here and make sure you guys can see. You can. My 2%, my 2.2 came and went. We're at 2.82 right now. Jack, what happened? Well, I guess I should have seen this coming. But let me just highlight a couple of issues where I think I went wrong on this chart. First of all, the big one is I just ignored this huge spike in the early 1980s. And the next thing I did in my effort to make this chart touch all these mid-80s and 90s here is I allowed this 2018 number to ride a little high here in my trend line. All right. Now, those always kind of stuck out of me as outliers, but I never really acted on it until I saw this on Twitter from Carter Worth. All right. And shout out to Carter Worth. This is fantastic. And he says the all-data log chart for U.S. 10-year Treasury bond yields is the most important trend line of all time ever in any and all markets. All right. Now, this is basically the chart, but what he did was he put it on a logarithmic scale, and that's the mistake I made in my chart. So we're gonna duplicate Carter Worth's chart right now. And to do that, what I'm going to do is I am going to take this data point all the way up here to the 1980s, to the high during Paul Volcker's rate hikes, right? And that was August or September of 1981, all right? And then I'm going to move us all the way down here, and I'm going to zoom in on the Powell pivot, all right? And I'm going to put this right on the Powell pivot. Now, that doesn't really look like a very accurate trend line, does it? That's kind of messy, right? But here's where Carter Worth earned his money. I'm going to go over here to settings, and I am going to set this to a logarithmic scale. And boom, look how that falls right in line now, even with today's data point. Now, Paul Volcker's rate hikes line up with all those other black swan events that I talked about over the years. The global financial crisis, the Powell pivot, the dot-com bubble. And look where we're at right here, just above it, right at it. And when I saw this chart from Carter Worth, this is one of the things that made me say, that's it, we're here. That this is the time to get out of stocks. Again, not a financial advice, not a financial advisor, do your own research and all that. But when I saw Carter Worth's chart and where we were at, and then I saw that head and shoulders in the S&P 500 that we talked about at the beginning of the stream, this chart. And when I saw what was happening in the banks, and when I got JP Morgan's earnings, I sold more stock than I've ever sold in my entire life. And shout out to Carter Worth when you set this to a log chart. And I don't normally do logarithmic scales, but man, it's hard to argue with that data. When you line that up, it looks really nice. And had I done that sooner, maybe I wouldn't have been saying 2.2 all along. Maybe I would have been saying something more like 2.7 or 2.8. But I didn't say that. So again, Carter, your chart was better than mine. Thanks, Carter. It was a good chart. Real quick, I saw Miracle Oil. Thank you very much for the super chat. And let's see what we say in our super chat. Miracle Oil says, what can pop the real estate bubble? Can you do XLE chart? There's a lot of questions here. Do you suggest shorting TLT and XLF? Can you do charts? Will tech go down further from here? Okay, we're going to tech going down further from here. Yes. All right. I think tech definitely goes lower. And tech has been going lower, right? The last couple of days, S&P and Dow have been kind of flat, down a little bit. Tech has been down big, right? There's a big secular rotation. It's been going on for months out of tech and into the more industrials and your consumer staples. That's your Dow stocks, all right? So of the three indexes, I think the Dow will outperform the S&P, will outperform the NASDAQ. The NASDAQ is the one I wouldn't want to be in. As far as shorting, I only trade in defined risk, all right? There are better traders out there, more seasoned than me, who will say, yeah, go short this or short that. The thing is, when you short, your losses are potentially infinite, and I just don't wade into those waters. If I want to short something, I'll look for an inverse ETF, and I'll go long that. At least that way, maybe I'm limiting my upside, and I'm exposing myself to more time decay, but I'm getting defined risk in doing that, and so far that has worked. Now, that being said, XLF, I think it's going lower. And TLT, give me 1 second to look at TLT, Mo. Let me shrink my big fat melon here. I believe TLT is the 20-year ETF. Is that what that was? Yeah, that's the 20-year. Come on, TLT. And the TLT, I believe, that is your bond prices. Yes, that's your bonds going lower. Here's the thing with shorting that. I think in the short term or even the medium term, that's probably a safe bet because I think yields are going to go a little bit higher from here. Certainly, we've got that big rate hike coming up. The problem is if the Fed were to suddenly pivot and to go dovish again, all right, you need to watch this close. If you've got shorts on TLT, because any day now the market could go haywire and the Fed could pivot and decide we're going to go dovish again. And when that happens, this is going to rocket higher. All right, yields are going to tank lower as bond traders front run it. So that's a risky trade. All right, be careful with that one. Again, not a financial advisor, not financial advice. The XLE chart, we are going to get to that one in a little bit, so hold off on that. And for real estate, Miracle Oil, I suggest you, and by the way, everybody else, go check out a video that the Economic Ninja just did a few hours ago. I shared it on my feed, on my channel feed. If you open up my channel and you go to the community page, you'll see I shared a link to that. Or you go right to the Ninja's channel. I'm sure a lot of you guys, probably all of you, subscribe to Ninja's channel already. But he just did a very interesting video about real estate. And watch that video until the very end because it made me think, all right? I would have been nervous about real estate, but when I saw Ninja's video, it kind of changed my outlook a little bit because he makes a very good point. I'm not going to spoil the video for you, but when this stream is over, go check out Ninja's video because that one was really good. Thank you very much, Miracle Oil. I appreciate the support of the channel and the super chat very much and your comments. And I see we have somebody else here. We've got Captain Sunshine. Hello, Captain. Thank you very much for the super chat, for your support of the channel. He says, when spending contracts, how will economies like Hawaii... When spending contracts, not contracts, I'm sorry, how will economies like Hawaii that make most of their income from tourists fare? I'm trying to buy a house in Paradise, and $600K for a 2-bedroom apartment is a little pricey, in my opinion. Well, first of all, Captain, again, thank you for the super chat. I don't know enough about real estate in Hawaii to make a judgment call one way or another on that. All right, and again, when it comes to real estate, check out Ninja's video that I just referenced when I answered Miracle Oil's question, because that was really really profound what he came up with, and it could happen. It's very feasible, and if that happens, real estate is going to rocket higher. All right. Now, Hawaii's economy is almost exclusively driven by tourism, and like I mentioned earlier, what's the first thing people do when times are tight? They cancel subscriptions. They eat out less. They take fewer vacations. All right. On top of that, the rising price of fuel, airfare to Hawaii is going to explode higher in cost. So I think Hawaii's tourism income is, to say it's at risk would be to put it mildly. And I know Hawaii's tourism industry has already taken a beating from the pandemic and everything else. And I just think that's going to get much, much worse. So that's interesting. When you have these localized effects on the economy, at the same time you have these market-wide things going on in real estate. Which one will prevail? I really couldn't tell you. But let's just say Hawaii, real estate in Hawaii, I would not be looking at that right now. Me personally, again, not a financial advisor, not financial advice. But I think the tourism economy in Hawaii is in for a real shock. There are tough times ahead in that economy. And let me make sure I didn't miss anybody here. Hello, Matt, Mr. Cheeseburger. And real quick, thanks again, Captain Sunshine, for your support of the channel. And good luck, by the way. If you are looking at, a place in paradise, more power to you. Just life's expensive out there. That's the one thing. Make sure you know what you're in for, because the cost of living in Hawaii is tough, but it is gorgeous. I've been there a couple of times and absolutely loved it. Cheeseburger, Mr. Matt, thank you very much for your support of the channel. He says, I've concluded lately that the world we've lived in is over. It's just a matter of time until people around me came to that same conclusion. That it's kind of doom and gloom, Cheese, but I'm inclined to agree with you. I say a lot on my streams that there are tough times ahead, but they're not here yet. Enjoy these days, because it may be a long time before we have it this good again. We're looking at the tail end of a 40 to 50 year trend of easy money, ballooning debt, and fake prosperity. All right, it's prosperity that has been built on the backs of future generations, and this immeasurable mountain of debt that we've taken out on their behalf. I mean, generationally speaking, we are the worst ever, right? Has anybody ever screwed a future generation more so than the boomers, the Gen Xers, and the millennials have? Seriously, I don't think so. I don't think any previous generation has been so awful to their descendants as we have. And unfortunately, it's the Gen Zers and our kids, whatever they come to be known as, will be the ones who will be left to sort it out. And there are some tough days ahead. I mean, to be honest with you, I think our kids, the kids who were born a few years ago or just being born now, they are the next greatest generation, because they're the ones who are going to have to clean up the mess that we have left them. Like my grandparents' generation, the greatest generation, that pendulum has now swung all the way back, and I think our kids live on that side of the thing now, where they're going to suffer. It's going to be hard. There are tough times ahead. They'll clean it up. They'll figure it out, because people are resilient when they need to be. And then the pendulum will start swinging back towards prosperity. And then eventually prosperity breeds complacency and irresponsibility. And I think we're just going to see that pendulum just rinse, repeat. And I agree, Cheese. I think we are coming to the end of that cycle. I mean, rates can't go much lower. Zero is right around the corner. Maybe they can come up with the easy money and turn the printers back on after this crash, and maybe they can buy themselves another 2 or 3 years. I don't think so, but I tend to be early. That's the one constant I've realized, is I tend to be early. But I'm inclined to agree with you, Matt. I think the world that we've lived in is, maybe it's not over, but it is coming to an end. It's not to say it's the end of the world. Right? I think we will go on, life will go on, but it's going to get hard for a while. All right? And that's why I say always develop a skill, folks. Invest in yourself. Develop some kind of a basic skill. Learn how to grow something or maintain or to repair something. Start that side hustle. Make yourself more valuable in the future, because if you're sitting there relying on your salary, your paycheck, your wages, the wages will be the last thing to go up, and they won't go up enough. So our standard of living is going to contract. Thanks again, Matt, for your super chat. I appreciate the support of the channel. And I see the Lord Hypnotoad. The Lord Hypnotoad. Hello, my lord. Thank you very much for your super chat, sir. I appreciate the support of the channel, and welcome. It's a new name. He says, what stocks or investments will you jump on when the mega correction occurs? All right, that is a fantastic question, my lord. As far as what I'm looking to buy when the correction occurs, I'm actually looking at farmland. I think when the correction happens, I think all asset classes will be sold off hard. I think physical gold and silver there's a good chance it becomes unobtainium. You won't be able to get it no matter how much you're willing to pay. If I'm wrong about that, I will buy some more physical gold and silver. but I'm not sure I'll be able to. If I can't buy physical gold and silver, mining stocks is one I would look at because I think they will be the first to rally off the bottom. They'll rally hard. And just in case they don't sell off, I'm already very highly positioned in mining stocks. I'm actually about 17% of my portfolio is in miners right now. But farmland is really what I'm looking to. I want to buy large tracts of land and then rent them out, and then I can increase my rent as commodity prices rise. That way I'm always getting some income off of that asset. I'm also looking at timberland, possibly, forest land where I could harvest the trees. I have a couple things like that, but generally stocks, be very careful because I think stocks are going to sell off hard and fast. They'll sell off so hard that I think the margin calls in stocks will bring down other good assets with it, namely gold and silver. And that's if you can get into gold and silver, physical gold and silver, because the paper gold and silver is going to fail. If you're holding a paper claim on gold and silver, except maybe the Sprott ETF, that one might hold out because I have a little more faith in them than I do some of the other, unallocated schemes. But that's what I'm looking at. I'm looking at land, not so much residential real estate because I don't want to have tenants and I don't want to have another house to maintain or to worry about a roof that could leak and that kind of stuff. That's just headache I don't have time for. But land that produces something, farmland, forest land, something like that. Thanks again, my lord, the Lord Hypnotobe, for your support of the channel. I really appreciate that, sir. And there's Matt, the cheeseburger, again. He says, have you noticed that people most ignorant of history seem like the types to be most badly affected by what's to come? Hubris. I like that word, hubris. Yeah, there's no excuse to be ignorant of history, folks. There's none. Because this little box here that you guys are watching me through contains the collective knowledge of mankind. All of the world's history is at your fingertips. And we don't need monks to spend their entire lives with ink and feathers copying it to preserve it for your benefit. It's all there, accessible to you. So there's no excuse for not knowing history right now. I mean, it's easy for me because I think history's awesome. I'm into it. I love to watch historical documentaries and read about it. I also like to, now that I've gotten more into finance and economics, the financial angles of history have also become very, very entertaining for me also. So, but yeah, people who are ignorant of history, the saying goes, they're doomed to repeat it. And, well, we're repeating history right now, aren't we? Because it's the 2020s is like the first half of the 1900s on fast forward. That's what I see the 2020s is doing. Like we're like mid 2020s right now, right? We're coming out of a pandemic and we're heading right smack into World War II or World War III or who knows what. And then you've got after World War II and during World War II, we had widespread starvation all over the world. And I think we're heading right towards that also. And we see it, right? We see global starvation on the horizon. Because if you've been following this channel, you know the story about fertilizer, right? Food inflation, everything that's going on right now, the food riots in Peru and in Sri Lanka, that's just scratching the surface, folks, because that's just inflation. That has nothing to do with the fertilizer story. That hasn't even started yet, all right? The fertilizer story will not set in probably until late summer this year. Late summer this year is when the farmers and the agricultural experts are going to start reducing their crop yield expectations. That's when the food commodities are going to panic and rocket higher. And that's when the food crisis really gets going. And right now, our leaders ignoring the problem. Have you seen one president or one senator or high-powered secretary of anything make some speech talking about how we need to hunker down and we need to attack this fertilizer problem to make sure we're able to feed our population moving forward for years to come? No, none of it. I saw Janet Yellen was convening the IMF and World Bank people, right? And European central banks, right? Janet Yellen is worried about the food crisis, but the people that she's gathering to address the food crisis, they're all bankers. Right? You ever hear the expression, to a hammer, everything looks like nails? Well, to Janet Yellen, everything looks like a banking problem. So they're going to get together to try to solve the food crisis, and they're going to try to print money to solve the food crisis. You can't eat paper money. You try it. Add salt. I don't know. But no, you can't print food. You need to make fertilizer. To make fertilizer, you need natural gas. To make natural gas, you got to poke holes in the ground, and you got to build pipes connecting those holes. We have no will to do that right now. I guess we have to wait until people start starving to death by the millions before we start doing that. Because through our inaction right now, that's what we're signing up to do. And this is not a hypothesis. This is a fact. Fertilizer is next year's food, and there is not enough fertilizer now. That means there's not enough food next year. This is a fact. This is not just me speculating anymore, and our leaders are ignoring the problem. Anyways, thank you very much, Cheeseburger. I appreciate the support of the channel, brother. Very much so. And I see Troy Rhodes. A lot of new names in the Super Chats today. Thank you, everybody. Welcome to the channel by all you guys. By the way, please like and subscribe while you're here if you're new to the channel. Troy Rhodes, thank you very much for your support. He says, how can we trust media report on earnings when they lie about everything else? It's a solid question, Troy, right? Because unfortunately, there's very few places we can go for accurate, unbiased information. All information has some bias. But you can't fake earnings, at least not for long. Companies that have faked earnings in the past have all gone down in flames. So look past the headlines. Look past the expectations or what analysts were predicting. And look at the numbers. Look at the year-over-year change in the earnings, the year-over-year change in the revenue. Look at the non-performing loans. Look at what the net interest margin or net interest income is doing, right? That's the difference between what they can earn in loans versus what they can pay out in interest. You actually have to look at the raw data and then ask yourself, does what the headline is saying and does what the analyst says, does that line up with what the data is telling you? And if they don't, then you need better analysts and better headlines, or question what you're seeing in the data. Like you've got to research both sides of the trade. You got to look at both sides of the argument and then decide for yourself who's right and who's full of it. And unfortunately, all the information that's available today is biased in some way. The one thing I can tell you is that since I switched off CNBC, all right, since I cut the cord and I canceled my streaming service that had CNBC in it. And, you know, I used to, when I was doing my research and everything, and throughout my day, I'd have CNBC just playing in my ear. My investment performance has increased dramatically since I turned them off, since I no longer have them squawking in my ear. All right. That's not to say I would just take what CNBC told me and I would go trade it. But just having them playing in my ear all day shaped my logic and my reasoning. And since I stopped listening to them and I start with the raw data, and if I see something in the data, then I go seek the headlines, or if I see a headline, I'll look for confirmation in the data. Then I've gotten so much better at this since I started doing that. And I tell you, if you just go by CNBC, you would know nothing about this food shortage that's coming, nothing about the fertilizer shortage. You'd just be like, yeah, buy Kathy Wood's ARK Invest. Yeah, the innovation thing is going to do great. Down like 42% year to date. Oh, sure, Kathy Woods is going to do great. Just go buy big tech stocks. And what if they talk CNBC all week? I mean, I don't watch CNBC, but I do look at their headlines. Nothing but Twitter and Elon Musk. Does that really matter? Like, it's an entertaining story. I get it. Like, I like to see Elon Musk giving the middle finger to the statists and the censorship people. But at the end of the day, it doesn't really affect the state of the economy. It doesn't affect what's happening in yields. It doesn't affect what's happening in food markets or in commodities. And that's all you get from these financial press people. So my opinion of financial press just goes down and down the further time goes on. Case in point, those headlines on the banks. And if you were watching the beginning of the stream, you'd see that. I mean, if you had just traded on the headlines of these bank earnings, you would have got cleaned out this week. So thank you, Troy Rhodes. I hope I answered your question. It was a very good question. And welcome to the channel, and thank you for your support, brother. I really appreciate that. And Captain Sunshine, again, thank you, sir. He says, long-time watcher, first-time super chatter. Well, thank you for watching long time, and thank you for your super chats and for supporting. I appreciate that. I know there's a lot of you guys, you quiet, silent types that have been out there watching. I appreciate you guys. I may not call you out by name, but I know you're out there. Thank you, guys. I appreciate everybody who comes and watches, and don't be afraid to speak up. Send me your comments, send me your ideas, message me on Twitter, tag me. You guys make me better at this. There's a lot of people now who are constantly sending me links and ideas and charts, and I try to respond to all of them. I don't ever, I just not enough hours in the day. I can't respond to all of them, but I appreciate each and every one of you guys that does that. You're making me better at this. Thank you from the bottom of my heart, and thank you, Captain Sunshine, for your support again, sir. And here is Mr. Matt again, the cheeseburger. Thank you, Matt. He says, "Don't worry, Jack. They're increasing the ethanol content in gas." Now you're pushing my buttons, cheese. You're poking the bear. He says, "Don't worry, Jack. They're increasing the ethanol content in gas. Problem solved. Have you read The Creature from Jekyll Island?" I have not read The Creature from Jekyll Island. I am about halfway through Rich Dad Poor Dad right now, which is fantastic, by the way, changing my whole outlook on life. I can't believe I waited until age 42 to read that one. But The Creature from Jekyll Island is going on my list. I've heard that one referenced a number of times, and I've seen interviews with the author. His name escapes me right now, but I've seen several interviews with the author of that book. So that is one that's going on the Amazon list. Thank you, Cheeseburger. And yeah, the ethanol and gas thing. Talk about our leaders in Washington. You see, this is Cheeseburger getting me spun up here. We're looking at global starvation right now, right? Like, I mean, millions of people around the world are at risk of starving to death, and they don't even realize it yet because it hasn't happened yet. It's coming, though. And instead of taking this problem head on, we're talking about diverting more resources from food to put it into our gas tanks in the form of ethanol. Ethanol gas, that is garbage. All it does is destroy our engines, which anybody who's tried to start a weed whacker in the last 10 years knows. You just pull that thing and it just... and then you smash it on the pavement and you can't finish your grass because ethanol killed your carburetor. And we're going to do more of that. We're going to put more of that crap in our gas tanks. We're going to shorten the lifespan of our engines, and we're going to starve more people to death because we can't possibly drill any more of our own oil, right? No, we couldn't do that. We're sitting on top of an ocean of gas and oil here in the United States. I mean, we are one of the most resource-rich countries in the world here in the U.S. We've got metals and minerals. We've got food. We've got access to 2 oceans. We've got natural gas. We've got oil. We've got infrastructure. We've got geopolitical stability, friendly nations, relatively speaking, to the north and to the south, no threats on our borders. I mean, we've got it made, and we deny it to ourselves. Instead, we buy it from all these countries that take our money and use it to cause havoc everywhere else, Russia, the Middle East. My God, I don't know. That's why we're just gonna carve off a section of it. I'm gonna found my own country. We're gonna start the People's Republic of Jackistan. You guys are all invited. And then Cheeseburger, you can be my my Admiral General. You can run my military. I'll be a kind, benevolent ruler. Dictator for life, though. That's how I roll. Thank you, Cheeseburger. I appreciate it, buddy. And Dumb Money Media, the king of money. Hello, sir. He says, "I'm working on a hype vid for Gold Silver Pro's Action Summit. Be ready, boys and gals. I smell some Comex skeleton warriors ahead." Thank you very much, and good luck with that video, sir. It's good to see you back on YouTube. I hope the move to Arizona has gone well. The king of money has reached escape velocity and gotten himself out of the People's Republic of California. Good for you. Good for you, sir. And some Comex skeletons ahead. Yeah, Comex's inventory is getting low over there. A lot of people are pulling metals out, and gold and silver charts are looking like they're headed higher. And I don't know if they can keep price smashing because the commodities exposure at the banks, they're in trouble right now. So I'm not sure. Hey, stranger things have happened, but that we could wake up first thing Monday morning to another price smash. They could do it at any moment. And I see Matt again. Cheeseburger, thank you, sir. He says 15 cents a gallon cheaper and way less energy dense. LOL, politicians sure need the ignorant and the stupid to survive, don't they? They thrive on it, Matt. Ignorance and stupidity and dependence, I will add, are the very things that politicians crave. The more stupid, uninformed, misinformed, and dependent you are, the more the politicians love you. So be independent, be wise, and they will hate you. Which they do. But, my heart weeps for their discontent. I won't lose any sleep over the politicians. All right, we are going to shrink my big fat melon of a head because somebody just mentioned gold charts. And check out that silver chart, that beautiful silver chart. Can you guys see? You can. We got that golden cross a couple of weeks ago. Look at that nice bounce off the 50-day moving average, and higher we go. And this was the high from back in November. And real quick, I'm just going to draw a line because a while back I had put a line here at this November high, and I made it horizontal, and we have now broken out higher above that. So folks, silver is going higher. We may back test down here in the around 25.30. If I see a bounce off of that and a move higher, I would be very, very confident in the direction of silver prices from there. And I see Troy Rhodes is back in the super chats. Thank you, Troy. He says, the great American experiment, now time to end it. I don't know what to make of that statement, Troy. How do we define the great American experiment? Are we talking about printing your way into prosperity with money printers? Yes, that it is time to end. This experiment in individual liberty and personal freedoms, no, I don't think it's time to end that. But, you know, as we drift further and further towards authoritarianism, which even the West, I mean, China just went crazy with that garbage recently. But even in the West, we have drifted dangerously into the waters of authoritarianism with censorship, with the criminalizing of certain types of speech, right? Like, one of the things I hate is when some of these, like, radical statist types, when they equate speech with violence, right? No. Speech may hurt your feelings, right? If somebody calls me a big doo-doo head, it hurt me right in the feels if you call me a big doo-doo head, right? But it's not violence, all right? It's not going to make me bleed, all right? It's not going to injure me, all right? So this idea that they can slowly equate speech with violence is the first step towards criminalizing speech you don't like, and that is a major step towards authoritarianism. So, man, I really went off on a tangent there, Troy. You really got me spun up. It is not time to end the American experiment in individual liberty and personal freedoms. It is time to double down on that. It is time to end this authoritarian BS, the censorship, all right? People are smart enough to make up their own minds. They do not need to be protected from information you don't like, all right? Give people the information and let them make up their own minds. And it's time to stop printing our way into prosperity, and it's time to stop borrowing money from people who haven't even been born yet. That experiment needs to end. Thank you, Troy, for the support of the channel, for your super chat. I really appreciate that. And Mike Bender from Robin RC Models. Hey, brother, thank you for your support of the channel also. He says, completely missed that you were streaming. How's the Coop coming? Happy Easter. Yes, Mike, I know you sent me a lot of messages this morning. I haven't replied to you yet. I was outside working on the Coop earlier today, and I just didn't have the phone out because I had dirty, grubby, bleeding hands. Keep chopping my hands up working on the Coop. But I got a couple of pictures here. Can you guys see these pictures? This is the status of the chicken coop. Again, I've talked about on this channel a lot. Develop a basic skill, folks. Work on a little bit of self-sufficiency because the economy is starting to shift the way it values skill sets. You programmers, you sophisticated skilled people, your value is going down. You farmers, auto mechanics, those types, your value is going up. So me being the mechanical engineer, I am working a little more towards getting in touch with Mother Nature and learning to live off the land a little bit. So I have my ladies are inside the coop here. This little trench you saw, this is what I was digging in the video the other day. I trenched all the way around that, and I'm laying this vinyl-coated fencing down there, so if any of the predators try digging under my coop, they will find metal instead of dirt. That's just a shot of what I'm doing. I'm attaching that right to the bottom of the coop there, all the way around, so they can't dig underneath. There's another shot. And there, I got a wire run into the coop right now because I have a heat lamp set up. It's still getting pretty cold at night. My birds are still young. So I've got a heat lamp in there, and soon we'll be letting them out into the run. We'll let them stretch their legs a little bit. And there's just another shot of my chicken wire cages all the way around. And when it's finally done and the girls are out in the yard, I will be sure to show you guys, give you a tour of everything. Thank you very much for the super chat, Mike Bender. I really appreciate that, sir. And for everything you do for the channel, for your messages. Somebody had mentioned the energy stuff earlier. I just want to talk a little bit about LNG right now. LNG is Cheniere Energy. If you're new to the channel, I've been talking about this one for a while because they buy cheap natural gas here in the United States and they sell it into European markets where it's much more expensive. And this company has been on fire all year. I started my first shares. I bought this in the 60s years ago. I started buying it again when it was in the mid 90s, back in October, November timeframe, and it's gone up substantially since then. I'm getting a little bit nervous about this one. I haven't sold mine yet, all right, but I just want to zoom in a little bit on LNG because we bounced below this channel this week and came right back up into it. I'm encouraged by that, all right. That's a good sign that we came back up into that channel. But the one thing that's really starting to worry me about LNG is this chart. This is ICE Dutch TTF natural gas futures. This is the European natural gas benchmark. And we had a big sell-off in European gas futures this week. We're now down around $90, or what is this, 90 euros per megawatt. I forget the units of what this is. But you can see these European gas prices have come way down from where they were at the start of hostilities in Eastern Europe. So I need to see these European gas prices higher before I say LNG is going to go higher. I'm a little worried right now because I see LNG stock going up and I see European gas prices going down. Coincidentally, U.S. natural gas prices are also going up. So lower European gas, higher U.S. gas. That is bad for Cheniere's earnings, even though I see Cheniere stock going higher. So if I see Cheniere Energy break down out of this channel again and head down towards the mid 130s again, I'll probably be looking to cash out of this one. All right, I'm not yet. I haven't sold it yet, but I'm starting to see some things in this chart that are making me a little nervous. That's all. It's not to say it's going lower from here. I like the bounce it got. It's back up into that channel, but I'm keeping an eye on this one. And somebody was asking me about that. And also, I think it was Miracle Oil. You asked me about XLE earlier. XLE looks really good to me. All right. Now, I took some profits in XLE this week. I sold the last of my May call options in XLE. I'm still holding my June call options. Those have nearly doubled now. My May calls almost tripled. So what I've been doing as these options mature, as they get closer, I try to sell within a month of expiration because the theta decay within 1 month just eats away at your profits. As these things are going up, I'm selling, I'm taking profits, I'm setting some of the cash aside for the crash, and then the rest I'm rolling up and out. I'm buying higher strikes further out. And as long as this trend continues, that is just printing money right now. So I'm going to keep an eye on this. Again, it looks like this upward trend is still very much intact. And again, if there's any kind of a decline in the geopolitical situation, which pick your poison there's any number of stories around the world that could make that worse, then oil is just going to rocket higher. So I am still in XLE. And thank you very much again, Miracle Oil, for the super chat. And I see we've got Mike Binder again, says, man, that Coop is safer than most nuclear plants, I guess. Well, Mike, one thing you learn if you spend time around nukes, we're very careful. All right. Maybe my investment strategy may not strike you as particularly careful. Most financial advisors would look at my strategy and tell me I was a wild man. But I'm not messing around when it comes to my ladies. All right. The Foxes will not be having my girls for dinner tonight. And shout out to Chris Taylor over at Financial Fitness, by the way. He gave me a lot of good pointers on the materials to use and everything else. He's been helping me out, giving me some suggestions for the Coop. Financial Fitness is an awesome channel, folks. If you're not following that one, you should be. Check out Chris's channel. And thanks again, Mike, for the super chat. And I see Wally, am I saying that right? Wally, he says, I agree. I'm getting farmland. It's definitely time to leave the big cities. Well, thank you, Wally. Thanks, Woo. Can I call you Woo? I appreciate the support of the channel and the super chat, sir, very much. And yeah, farmland is one of the things I'm looking at as an investment. Probably, maybe a little further away from my house. Not necessarily my immediate area. But I'm not going to become a farmer. Right? I know I'm like building the chicken coop and everything here. This is just a hobby project and a little bit of self-sufficiency I'm working on here. When I say I want to invest in farmland, I want to be a farmer's landlord. All right. I want to rent the land to a farmer who grows something productively on my land and pays me a rent in exchange for that. All right. That's that's what I see as a safe investment during troubling times, during periods of hyperinflation, right? I have an asset that is protecting my wealth, that's generating a return, and if we get a decline in the currency, that return will increase nominally because the crops that are grown there go up in value. And, look at what Bill Gates is doing. Bill Gates is the biggest owner of farmland in the world right now. And we got a food crisis coming. So if you own farmland, you can name your price. So thank you again for the support of the channel, Woo. I really appreciate that, brother. And let's see. Did I have any more charts that I needed to share with you guys today? I did have the corn chart up. I'm going to cover this one real quick. So corn, look, this trend, it's going higher. It keeps going higher. The one thing I see in the corn chart that's starting to make me a little nervous is down here, the RSI, or here, let's move my big fat melon of a head out of the way. Put me over here. This is the corn ETF, ticker CORN. I bought call options in this one. My calls in corn have increased about 150% right now. They're so deep in the money that they're not even really levered anymore. So I have to do something with them. I'm probably going to start selling them and taking profits now. I may roll them into other options at a higher strike price. But right now, the macroeconomic case for corn is still screaming higher corn. I see the RSI is getting up into 75 right now. This is about as overbought as corn has gotten in the last couple of years. So I wouldn't be surprised to see a little bit of a downtick from here over the next couple of weeks. So I'm probably going to start taking profits in my corn ETF, my call options in this one, and then I'll look for any kind of a pullback to buy those back at a higher strike. All right. So, and the only reason again is I see that RSI. It seems to be getting a little toppy there. But so far, my agricultural investments have all done very well. My energy investments have done very well. Precious metals are starting to do well. And the last thing I'm going to mention, the CBOE volatility index. This is now about 7% of my portfolio. I bought call options in the volatility index, or the VIX. Now I'm really just about even right now. These haven't made any money. They've been going down, and I've been buying more as they go down. And as I've been taking profits and other things, I've been buying these call options in the VIX. But I just want to point out this. We have this it used to be support. Now it's acting as resistance a little bit, right around where the 50-day moving average is. I think the VIX any day now is going to explode higher, heading into the high 20s, probably low 30s. I wouldn't be surprised even to see in the 40s, because if you zoom out, you can see we've been making higher highs also here. And that's in relatively short order. And so I am buying call options in the VIX out to June, mid-June. So I think within the next, really any day now. I'm surprised it hasn't happened already, to be honest with you. We are so due for a big spike in VIX, for one of those 1,000-point day sell-offs. I thought the bank earnings was going to be what did it this week. It didn't happen. That's not to say the bank earnings were good. They were awful. But I have been just buying more and more and more of these VIX calls, and right now they're about 7% of my portfolio. They're not doing much for me, but I am sticking with this trade for the time being. And shout out to Devin Bryans, who's been helping me out with this one. Devin, appreciate your help, buddy. And last but not least, I see Matt, Mr. Cheeseburger again, says, could the market crash happen over Easter break? No. Markets can't crash if they're not open. So, no, the market crash won't happen over Easter break. But keep an eye out. I believe Sunday night is when commodities open up. If you want to see, watch the headlines over the weekend, and then look Sunday night after 6 p.m. Eastern time when the commodities start trading. If you see any big sudden moves in commodities, that could signal something bad is going to happen in markets on Monday morning. But no, there is no market crash is going to happen over the weekend. You guys can relax. You can enjoy your family time. I want to wish everybody a happy Easter. And again, I know we talk a lot of doom and gloom here on this channel. There are difficult times ahead that, I'm not going to sugarcoat it. Things are going to get bad, folks. If I'm right about half of this stuff, things are going to get very bad. But it hasn't happened yet. So enjoy these times, all right? Because we don't know how long it's going to be before things are this good again. So if you're with family this weekend, hug them close. Enjoy these times. Have a lot of fun, all right? Enjoy the good times. Be ready for the bad times. And until next time, live small and dream big. Oh, and Oh man, I messed up my sign off. I just want to send a shout out to thank everybody for the super chats and thank my Patreon supporters. Thank you guys for supporting the channel. I couldn't do this without you guys. All right, now I'm done. Live small, dream big, happy Easter, all that good stuff. I'm out.